Hello everyone and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is October 5th, 2025, and we are doing a deep dive into Ethereum, symbol ETHUSD. We'll start by covering the massive news stories circulating right now, including a historic supply squeeze, and then we'll jump into the charts to see how this is all playing out in the price action. There is a lot to unpack, so let's get right into it. First, let's talk about the news, because the headlines are incredibly significant for Ethereum. Multiple sources, including Blockonomy, are reporting on a deepening supply squeeze, with billions of dollars in ETH leaving exchanges. This is the first recorded time that the outflow of Ether has surpassed the exchange's ability to accumulate it, signaling massive demand from both retail and institutional players. This is being described as one of the strongest demand setups for Ethereum we've seen. On top of this, institutional adoption signals are flashing green everywhere. Swift, the global financial messaging giant, has been confirmed to be leveraging Linea, an Ethereum layer 2, for its crypto payments ledger. Walmart-backed banking app OnePay is also planning to integrate Ether trading later this year. This level of institutional integration is a powerful long-term bullish catalyst. While the broader market saw a revenue decline in September due to low volatility, stablecoin market cap has surged, which many analysts see as rocket fuel, waiting on the sidelines. Now, let's see how this powerful narrative is reflected in the price. Looking at the daily chart, we can see the broader price story for ETHUSD over the past year and a half. We had a massive run-up that peaked in mid-August 2025, topping out just shy of $5,000, specifically around the $4,958 mark. Following that peak, we saw a sharp correction through late August and September, finding a significant bottom right around the $3,875 level on September 25th. This $3,875 to $4,000 zone has established itself as a major area of long-term support. Since that low, we've seen a very strong reversal and impulsive move to the upside, which correlates perfectly with the timing of the supply squeeze news breaking out. The price has decisively reclaimed the $4,250 level, which news reports highlighted as a critical pivot point. Currently, we are trading just under the $4,500 mark, which is our next psychological and technical resistance level to watch. The volume during this recent ascent has been solid, confirming the strength of the move. Now let's switch over to the 15-minute chart to analyze the current short-term trend in more detail. Here we can see the powerful rally that began at the end of September. The move started around the $4,150 level on September 30th and saw a massive leg up on October 1st, breaking past $4,250 and then $4,350 with conviction. This shows strong buying pressure entering the market. After a brief consolidation, another powerful surge on October 2nd took us all the way from $4,350 to nearly $4,500. Over the last couple of days, the price has been consolidating in a range, mostly between $4,450 and $4,520. This tightening range after a strong upward move is typically a bullish continuation pattern, suggesting the market is gathering strength for its next leg up. The lower bound of this range, around $4,440 to $4,450, is now our most immediate term support level. A break above the range high of $4,520 would signal a continuation of the uptrend. Conversely, a break below $4,440 could signal short-term weakness and a potential retest of lower levels. So, let's bring it all together and talk about what to look for next. There are strong fundamental reasons to be bullish on Ethereum long-term, driven by the supply squeeze and major institutional adoption. The technical picture on the daily chart supports this, showing a strong reversal from a key support zone. The short-term 15-minute chart shows a healthy consolidation after a powerful rally, which is constructive for another move higher. So, let's recap the key price levels. Immediate support is at the bottom of the current range, around $4,440. The next major support level is the critical pivot at $4,250. Our most important long-term support remains the $4,000 to $3,875 zone. To the upside, immediate resistance is the top of the range around $4,520. A break above that puts the analyst targets of $4,750 firmly in play. Beyond that, the final major hurdle is the previous all-time high area around $4,950 to $5,000. Given the powerful fundamental drivers, I believe a bullish continuation is the more likely scenario, with about a 65% probability. A clean break and hold above $4,520 on high volume would reinforce this outlook significantly. A bearish breakdown becomes more likely, maybe a 35% probability, if we lose the $4,440 support, and would be confirmed with a break below the major $4,250 level. Keep an eye on Bitcoin's price action as well, as its dominance can affect the entire altcoin market. That's our analysis for today. As a final reminder, this video is for informational purposes only and is not financial advice. Always do your own research before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.